All right, I think we're going to get started. Our
School year.
August Board of Education Finance Appropriations Committee. Mr. Treasurer, would you call the roll?
Mr. Peretti?
Here.
Mr. Brown?
Here.
Ms. Zaranen?
Here.
Ms. Hudson? Mr. Jordan?
Yes.
Mr. Miller?
Here.
And Mr. Stewart. And you have a quorum.
All right. Well, first and foremost, I just want to thank everyone for coming here. To Jordan Miller and Jeff Jordan, I want to thank you personally for taking the time and helping out our district and being a part of this process. This is a process that we started about 3 years ago, and it's come a really long way. And it was the help of Dr. Good and our fantastic folks in the Treasurer's Office and our Budget Office, and it's really evolved over the years. And it's really become something that our district is able to showcase now to other districts across the state and the region. And it's been one of those major tools that we use to continue to be transparent and accountable to the public. So we're really proud of it, and we're really, really happy and honored to have both of you serve with us here today. So thank you very much. I'm going to go over the agenda really, really quickly. Maybe we can have Stan do some quick introductions. Maybe we can go around and introduce ourselves. And then we will get into the agenda. Again, today is a light agenda based on the time of the year. Right now we're just coming out of a break. We have some forecasting that'll happen in October, but we'll start to see in September, as we talked about earlier, as well as our annual budget process, which internally starts to ramp up in October, November, and we'll be able to discuss that process. But this is just a fantastic time for our new members to come on, to start to see how this sort of operates, what the different moving parts are, to ask questions, get acclimated, and we'll be rolling. We have a lot of stuff going this year. Our September meeting is going to be very vibrant with a lot of things, including 2 months of financials, starting to look at the 5-year forecast, as well as our newest tool that we want to start to use, and that is looking at our facilities and how they are operating, what the costs associated with that is. So it's going to lead into a very good discussion, and I think an important tool for us to have. And again, it just lends to that notion that we are making sure that we are looking at everything in this district, and we want to be accountable, transparent, and let the public know what we're dealing with. I think it's very important with that. So on the agenda, you see that we will do the June minutes, our monthly financial report for June, and then we'll have a few updates from Mr. Pechoric, and then just some questions, and we'll adjourn. It should be a very, very light meeting. So with that, maybe I'll just start with myself. My name is Dominic Peretti. I'm a Board of Education member. I was elected in 2013. My regular job is in the General Assembly. I'm finishing up my 9th year there now. Myself and Mary Jo Hudson and our team here created the Finance Committee as one of the major things that we did coming on as new board members. And like I said before, it's been one of those processes that we've fine-tuned and changed and adapted, and it's become a real highlight of this district. A little bit more about me, I guess briefly. Like I said, I work in the General Assembly. I'm the youngest of 6. I live in German Village, and I'm married. And it's just great to be here. And I never know what to say about myself. I usually have a beard, and I just cut it off, and it's been frightening to a lot of people. And whoever wants to go next, maybe Eric, please.
Yeah, I think you know me, at least in terms of publicly, and to some extent, everything is public. I am very happy to be serving on the board. It's been some real good challenges, some very good people to work with, and I had 15 years of school board service way back at the front end of my career, and enjoyed that a lot. And after retiring as a judge, this opportunity just looked better and better, and I don't regret that for a moment. I've got two daughters, 3 grandkids. Older daughter's a school board president in Gahanna, and very proud of both our kids, and the 3 boys are in school there. Married to Marilyn, and more and more often I'm introducing myself, that way, which is just fine, or as grandpa. And, I bring lots of different experience.
All set? Well, I'm Stan Pahoric, School District's Treasurer and CFO. I'm starting my 4th year here. I think I'm also starting my 40th year in public finance. Having been a school treasurer, investment banker, investment advisor in the private sector, and kind of gone back and forth over the past 40 years, which is a little unsettling, I'll say. I won't bore you with my married life. That's always a story. Typically here at the meeting, you also have Board Member Hudson, who can't be with us, Mr. Gooding, who usually sits here, the Executive Director for Budget, and I think there's more to his title, but he's out at a professional meeting today, but he's typically here. Scott reports to Dr. Good. I'm a direct report of the board, but he and I work hand in hand as he does the expenditure side of our operations, and I generally do the revenue side, but we still have to work very closely together. Scott's been around not quite as long as I have. I think he may be about a year longer at the district than I. He is also a former school treasurer at multiple school districts in various parts of the state. On the other side of Mr. McCammon would typically be our internal auditor, Carolyn Smith. I can't speak much to her background because I don't have it memorized, but she's been here for some time. Kevin, back in the back, might know more details, but Kevin is typically here also as a representative of the Internal Audit Office. Also in the back, you may have met these folks, but Chief of Staff Maria Stockard, Legislative Liaison Eric Roush, Chief Operating Officer Maurice Oldham, JC Batten over here, which is our board liaison. My secretary, Diane, she is always here making sure I keep the minutes correctly. And then there's Mike.
Hi, I'm Mike McCammon, and I'm the controller for the district. This is my I've been with the district 11 and a half years. And this is my 27th year in government finance.
Mike's favorite food is pizza.
Well, should I go?
Sure.
Or, yes, did everybody else go? Hi, I'm Jody Zaranen, and my background was in finance. I worked in mutual fund administration, did a lot of financial reports for all the different mutual fund groups. I also did work in nonprofit operations management, so kind of the opposite end of the scale with the smaller numbers. And then I live in Northwest Columbus in the Centennial Feeder Pattern. I am a graduate of the Worthington High School and the Ohio State University. I like to say that. Before they added Thomas to the name. So, and I've served on this since the beginning of the.
You are
yes.
a charter member.
And I'm still here. So nice. Welcome to both of you. Thank you.
Well, I guess I'll go next. I'm Jeff Jordan, and first of all, appreciate everybody making us feel so welcome at our very first meeting. It's a pleasure to be among what are about to be new friends for the next term, and so we're certainly excited to be part of that. I'm the Chief Financial Officer of the Ohio High School Athletic Association. I've been there for 6 years. And prior to that, I spent 10 years at the State Department of Education as the head of grants management and as the head of school finance. So I have a little bit of that background to be able to bring to the table. And then for 6 years before that, I worked for the State Auditor's Office. So about 20 years of state government accounting experience before I got to here. And the Ohio High School Athletic Association represents 350,000 student athletes and 16,000 sports officials every day in 800 member schools. So, and we're proud that all of the Columbus Public Schools are part of that process too. So it is very nice to be here. Personally, I am my wife, Robin, and I have 2 kids, 13 and 9, and so we are well immersed in the school world right now, where they're about to go back to school in the next about a week or so. So thanks for having us.
I'm Jordan Miller. I'm the regional president for Fifth Third Bank here in Central Ohio. I moved back here about 10 years ago to take this position. I'm from Columbus Public School guy. Been in banking pretty much my entire adult career after the military and after college. I lived in Cincinnati for several years with Headquarter Bank, and I ran our investment division there, and got the call to move back here back in 2007. So I've been back here. Lucky to have a guy like this as a good client, and lucky to know Stan back in the days we worked together at Huntington Bank. That's been a long time, Stan. You've gotten a lot older, man. But I don't know anything about school accounting. I'm here to learn and listen and try to bring whatever expertise I can to the process. I have 2 kids. One lives in Vermont. The other is here, and he's got all the grandkids. So I've got 4 grandkids, 2 boys and 2 girls, and I'm at that ripe age to be with them. So again, thank you for having me, and I'll try to add whatever kind of expertise I can to help you guys with your mission.
Thank you.
Absolutely. So welcome to both of you. Jody, it's good to see you again. And I'm Dan Good. I'm the superintendent. This is the beginning of my 38th year of public education. I started my career at Worthington, and then was in Westerville and Worcester, and most of the W districts I served in. I graduated from West Alexandria, so. But this is the beginning of my 5th year with Columbus City Schools. I actually locked into retirement during the change in STRS 5 years ago, and so I'm actually anticipating a second retirement in 143 days, so, which we announced this morning. So I'm looking forward to spending the first half of the year with you. And that's all.
I like I have exactly how many days, 143.
Very
already ready to
precise
go.
there,
It
wasn't
wasn't a calendar.
But who's counting, right?
Well, again, thank you to everyone. Thank you for helping us and help serving this district. It really means a lot to us. I'm really looking forward to this year. I'm looking forward to our first half of the year with Dr. Good. And, we're going to have a lot of really great conversation, a lot of growth. We're going to encounter things sometimes that we don't expect, and we're going to have to continue to fine-tune things. So, which is always why this committee's been, really great, because it's been very flexible. There are some core things that we do, but as I said, every year we've been able to fine-tune more and more and more. We're getting more and more, shedding more light on the complexity of school finance, what goes on in our buildings, how much things cost. And like I said, it not only educates us in the district, which already know, but the community as well. And I think that's a really, really big piece of this. Everyone knows how school finance works. It's quirky, it's strange. It's based on levies and state funding from the state that changes every 2 years. There are a lot of unknowns when it comes to school finance. So with that, again, thank you. I'm now going to move into some of the business of the committee meeting today. And in your packet of information, you're going to find our minutes from the last meeting, which was in June. And if we could just briefly look at those. Clerical reasons. Any discussion on those? I move that we approve these minutes. All in favor, say aye.
Aye.
All those opposed, same sign. All right. Well, those are done. And now we are going to move into our monthly financial report. And you're going to have 2 documents here. You have a sort of a PDF presentation, which is sort of the boiled down analysis of the month-to-month report that we have. And then we also have another packet that looks like this. This is sort of in the format, and maybe Stan, you can help explain this a little bit more, sort of what our 5-year forecast sort of looks like, essentially, the actual legal document that we put together. In that, the following document, in this document, you're going to find a much more in-depth analysis of these figures, of our revenues, of our expenditures, and all those sub-items. So if there's anything, Stan, you would like to add maybe to these documents, we can dive right into the monthly financial report.
First, the document that I call the green bar document, it is laid out almost exactly like our 5-year forecast, which is something that I incorporated when I arrived here. I felt that the financial reporting, since we have the forecast, it's such an important document for us that on a month-to-month basis, that we should just gauge everything against that forecast format. And from a discussion standpoint internally, we are always referencing what we do in terms of the impact on the forecast. So we keep the 5-year forecast in mind operationally, just day in and day out. Here, we boil it down to month, but I still present it in the format that the 5-year forecast would be in, primarily in terms of the categories on the left-hand side. Those line items are numbered as they are in the forecast. We, in this district, for this reporting, I combine the lines for state aid, 1.035 and 1.040, simply because the differentiation between those two is not important to us, because the way the accounting works and we're on the cap, it's really a proration. I won't get into that right now, but to try and forecast what comes in on individual lines can vary when our state funding calculation changes, and yet we're capped, and so they simply prorate the numbers back, and so there's really no reason why there's money on 1035 versus 1040 when they do it that way, they being the State Department of Education. So I collapse those because otherwise we'd be looking at variances, the explanation of which would be an accounting function. Moving on down, I do combine personnel-related items, salaries and wages, and fringe benefits. We look at those collectively, at least on a month-to-month basis. We pretty much forecast them collectively, so I do combine them. We do track them separately and report them on the forecast separately. But again, month-to-month variances, line by line, are more evidence of perhaps errors in allocation than they are anything else. So we do combine those for some simplicity's sake. Then line 3.030 is typically all purchase services, but in this district, as you can see there, we have a very large component that goes out in terms of charter schools. So of about $245 million that's expended in purchase services, 180 million of it is for charter schools. So we like to call that number out. Over time, we talk about how we forecast and budget for that, how many children are involved, what's the cost per child, but typically we like to call that number out and have a discussion about that. And the rest of it is, again, just like the forecast and fairly self-explanatory. We have some operational categories and non-operational categories, both in terms of revenue and expense. Some of the line items we can control fairly well, others are out of our control because they're determined by what I call exogenous events, tuition and charter schools and things like that. So, but this layout is very consistent so that when we see these results on a month-to-month basis and they're either favorable or unfavorable, this will tie right into the next development of the 5-year forecast. Behind it, I think again new since my arrival, is what I call the Management and Discussion Analysis, MD&A. I typically go through line by line and discuss changes from the previous month so that it highlights our conversation for what we're going to have here at the Finance Committee. What I present here at this point is a very high-level overview of that. That's what's in the PowerPoint. This is the exact same PowerPoint that I'll present to the Board of Education next Tuesday. We have Finance Committee meetings right in between the first and second Tuesdays of the month because the board meets first and second. So our plan is to always look at the financial data on the second board meeting. So we meet the Thursday before. So we can report out, say the Finance Committee has reviewed this, they've asked questions. The board trusts and relies on this discussion. Some board members will ask a few questions at the board meeting, but typically they've had this. 3 of the members sit here. It just helps streamline that process and communication to have this committee look at it and delve into it to the degree that you choose to. So, but this presentation will be exactly what I give to the board. It's very high level, but they do get all of this detail, and it satisfies our requirement to do a monthly financial report to them. So with that in mind, I move into this general overview. First looking at revenues and expenditures in the aggregate. This is for the month of June, the final month of the fiscal year. We do run on July 1, June 30 fiscal year. We finished this year in what we call the desired pattern, where revenues are slightly above plan and expenditures are slightly under plan. We tend to be very conservative in our forecasting. so that we don't want to be too aggressive with revenue estimates. So we prefer to outperform those, if you will. And on the expenditure side, we would prefer to come in under rather than have our regular expenditures come in above plan. This is the preferred way to have a cash balance better than what we anticipate because we are very much cash oriented in school districts. As you may know, we do produce an accrual report at the end of the year. We is kind of a loose use of that pronoun. It's he that produces the CAFR. Mike, as the controller, is responsible for producing the CAFR, the Comprehensive Annual Financial Report, at the end of the year, which is available. We do not manage by it. It's published, it's available, but it's certainly not a day-to-day management tool for us. It's great for bond issuance and rating presentations. They love to see all the data that's in there and that presentation of our financial position. But from a management perspective, we live and die by cash, the 5-year forecast on what we do here month to month. Looking at revenues and expenditures through the end of the year, revenues were above plan by 3.7%. As you'll hear later, this is largely due to the fact that the original plan, which we put into place in the summer of 16, was pre-operating levy, the November operating levy. So we could not in the forecast and therefore did not assume the passage of the levy. You can only do that in the forecast after it's been passed. Once it passed in November, we did update the forecast. I took it to the board in December. We adopted that forecast and then refiled with ODE so that they had the most recent data on hand for those that went there to look at the information. So that $31 million variance to the good is largely due to that new levy. On the expenditure side, you'll see that we ran just under 2% under plan, about $14.6 million, and we'll get into some of the areas there. Those two variances drove the cash balance about $46 million higher than anticipated, and we ended the year at about $137 million on hand. Breaking the revenue down into very general categories: property taxes, state revenues, other operating, and then non-operating. Property taxes, again, pretty much drove the favorable variance, again, due to the new levy. We estimated approximately about $25 million in the first half collection for the new levy. And in addition to that, again, conservatively, we would expect our revenues, our tax revenues, in this particular case, to run about 2% above plan, or $8 million. So the $8 million is kind of a typical variance, favorable, $25 million due to the new levy. So that all worked out very much as we had expected. State aid, it's driven by the formula. We are a capped district, if you understand what that is. We have a calculation that's based upon numbers of pupils, categories of pupils, and dollars per pupil. And they multiply all that out, and then as the state goes through their budget and work their magic, which is the most polite thing I can say, they figure out that there are more people at the table than there are pieces of pie to go around, if you will, and decide that, well, some people aren't going to get a full slice of the pie. And those are the cap districts. So they limit our growth from year to year. In the past 2 years, it was 7.5%. And so we get that number, and it pretty much stays on target. There are some other state categories that can vary from time to time. But this year, probably as much luck as anything else, we came right in on target. I mean, that's a very, very small variance on the state budget numbers and the state revenue numbers. Other operating, it came in about $7.5 million above. You'll read in the MD&A what's comprised in there. It's in that number, we receive money relative to property tax cases. As you may know, we participated the Board of Revision and the Board of Tax Appeals relative to property values within the district. In addition to the triennial update and reappraisal, the sexennial reappraisal that we're going through right now, this year, there are triennial updates that increase or decrease property values. But each year we look at that, we look at sales cases, we look at very large commercial properties, sales that go on to make sure that those transactions that those values are accurately reflected on the property tax roll so that everybody pays their fair share is really the bottom line. So sometimes we just get an increase in value and that goes on their tax bill and they pay that over time. Other times we reach agreements, agree to valuations. Sometimes we agree to payments in lieu of taxes, but all of that flows through here when we make those kinds of arrangements with various property cases. Very hard to predict, and so typically we're conservative, and that's a large reason why that line comes in over. Non-operating involves transfers, in this particular case, advances and transfers in. Typically, the advances are based upon the cash flow needs of other funds. At the end of each year, funds cannot end in a cash deficit, but if you think about federal programs that reimburse us after we expend money, you get to June and we've not been reimbursed for everything, so typically we do some advances there. Those advances out are typically advances into the next year. For our forecasting, we assume that we assume that advances in and advances out are equal. One of the things that we've looked at is we make an assumption, I think in the past is, when I got here it was about 30 million in and out. I reduced it to 20 million in and out because it wasn't running that high. And this next year I'm going to reduce it even more because some of these variances are just because we estimated too high. So we're going to base it more on experience and cut it down. And so, but that again is nothing that we can control. It's dependent upon cash need of other funds. Transfers in and outs are part of this. When we do the forecast and we present it this way, we have to bring in debt service. It's part of the general fund, specifically bus purchase activity. I can't remember when it was. How long ago was it? Do you remember? So we bought buses.
5 years ago.
Just 5 years ago. When we bought transportation back in-house, we bought a rather large number of buses. We financed that on an inside millage basis or an unvoted debt basis, so we have to make that transfer out of the general fund to the debt service. They like to see that reflected here. Kind of double counts it. Comes in at the top, comes out at the bottom. But that's what's in there. So that's fairly predictable in the non-operating. And we also do a transfer every year in support of the athletic fund, a little over $600,000 that goes out there. So that's what's in that line. But the variance is primarily due to the advances.
And really quick, just before we
Yes.
close out of revenues, and I know we touched upon the cap. I think when I first got on the board, we were a 10% cap district, moved to a 7.5%, and now with the last budget went to a 4.1 and a 4% cap. So it's just one of those things that we very much feel financially from the state, and just one of those things I thought we should just make.
And that's a growth number year to year. We've been running anywhere from $80 to $94 million, what I call into the cap. In other words, our calculation is, $90 million higher than what we actually get because we're capped. In the forecast last October, we assumed that it would continue at 7.5. In the early spring, when the governor's budget came out at, I believe, 5%, we modified the May forecast to be at 5% growth in the cap in the out years. And now, as Board Member Peretti has pointed out, the final budget came in at 4.1 the first year, 4% the next year. And so, since that compounds, you can see that it's a pretty dramatic effect when that number changes. There's a big difference between 7.5 that we planned for, 7.5 that was in the levy campaign in 16, and now we're faced with how do we deal with that 4% differential. And that's all. You'll hear more and more about that as we get into the 5-year forecast.
Is this STEM school, is that for the metro school, or what is that STEM school it's on the transfers? You got community school, STEM school, scholarship.
Yeah, we pay. There are different categories. There are. It's one of the many transfers out. Vouchers, community schools, and they separately identify the STEM school transfer that goes. I think there are 2 on our list in particular. I don't know the name of them off the top of my head.
Curious why
Do you know,
these
Eric?
Specific STEM.
STEM schools are organized under another chapter of the revised code. They're under 3326. So the community schools are under 3314. You have the vouchers under 3310, and then you have the STEM schools under 3326. So that's what the difference is.
Thank you.
See how simple school financing? All set?
Thank you.
On the expenditure, I share this with the board and the committee, just simply another way to demonstrate, primarily here for me, the magnitude and where we tend to focus our attention. Property taxes and state revenue are clearly the two largest sources that we have. Property taxes not just slightly above where we are on state. I think it's kind of 50, almost like 53-47% differential, but just to give you an idea of the magnitude here. And then watching it month to month, we will have conversations about what's the best way to predict our expenditures month to month. Although Scott runs all the budget managers through the ringer on preparing not a 1-year but a 5-year budget, which is I think unique and kind of, I guess I'll say, cutting edge for school districts, so that the budget managers are thinking 5 years at a time, not just one. But we don't ask them to go month to month on that. We don't see the value in that yet. So I used typically last year to predict this year, and I mentioned to you earlier about how I might try and do some more longitudinal studies to see if we can get a better indicator. But we always struggle with, are the month-to-month variances indicative of a behavioral difference, or simply because this year is a little bit different than last year was? You can look at utility consumption, for instance. You get a change in the winter, that'll throw your month-to-month off, and it's not because we're necessarily doing anything different, it's just that we didn't consume it because we didn't need to. So we look for those kind of explanations as well. Scott and I are delving into that, as we speak, so to say. So, but you can see here, it matched fairly well on the revenue side. July and August, and then January, February, and March are property tax collection periods. So you can see that can vary somewhat from year to year. You might get advances sooner or later in 1 year versus the last. But overall, by the time we get to the settlement period, which would be the end of March or the end of August, maybe early September, we should have things smoothed out on a year-to-date basis from property tax purposes. So that's what that is attempting to show you. On the expenditure side, the first category is personnel, both salary, wages, and fringe benefits. This ran above plan for the year and is related to what we've referred to as the 27 pay issue. In this year, we did not recognize that we had 27 pays creep into the 12-month period, July to June, and consequently that was not in the plan. We had originally estimated that we'd be about 15 or 16 over, but typically we come in under on our personnel expenditures versus what we conservatively estimate. So that several million versus what I thought would be 15 or 16, we ended up at 13.27. All related to that 27th pay issue, and not because we've done something different and ran over in other personnel lines or fringe benefit lines. For these discussions, I combine all the non-personnel activity absent charter schools and community schools and all those deductions. This is the category that we are going to delve into a little bit more because it came in 18 million under what the plan called for. So we're looking at various categories and various budget managers who didn't expend all of their funds to see, well, if they didn't expend it, did they actually encumber it, so it'll be an expense in the coming year, or did they simply not obligate the funds at all? All of these reports are on a cash basis. They don't take into account purchase orders that are issued, orders that are made that have not yet been paid, because we don't deal on an accrual basis, if you will, but we will look at that internally to see if it's just a timing of ordering something and then not having to pay for it until the next fiscal year. Community schools, you can see that I was perfect.
Yes.
Perfect on this number. Actually, I was $3,842 off, I think, or something like that. And interestingly enough, that also includes college credit plus is the term in that lineup, which was about $600,000, which I hadn't anticipated. So that and charter schools coming in a little bit less than what we thought worked its way out to actually hit the number right on the target. So as much as I would love to take credit for a perfect forecast, again, there was some luck involved there too. That number will climb, or we project it to climb each year. Again, to be conservative, we really want to estimate more than less. because we can't control, we can't turn that off. Other budget line items, we have the opportunity sometimes to turn them off. Non-operating, again, advances out with the same issue as the advances in. We'll reduce the estimate for those in the future in a corresponding fashion. Non-operating, okay, I got that. Total expenditures down almost $15 million for the year, just 1.7 under plan. So you can see, because of the magnitude of the numbers, that we have reasonably small percentage variances, and although they do result in some sizable dollar differences, we can face these $10 to $20 million swings at any given point in time, because drilling down is sometimes we're not capable of doing that. We get that much closer. That's where we are on expenditures. Similar to revenues, I demonstrate the relative composition of our expenditures. You can see that personnel, dollar-wise, is our largest expense, not atypical for school districts because we are a people business. Community schools are our second largest category, which I believe we're pretty unique in, and then the other two major groupings. Month to month, fairly close. Again, that 27th pay threw me somewhat for a loop. You can see there in June, it jumped up. But last year was a fairly good predictor for this year on a month-to-month basis. All in all, revenues over plan for the year, expenditures under plan for the year. And we will have then the July and August report for you in September. As I said, in addition to preparing the 5-year forecast during the month of August, we're also working on the month-to-month plan for what we've appropriated this year. I think I mentioned before the meeting the 5-year forecast this year, or is that something later on? Oh, I'll do that later. I'll talk about the preparation of that later. But that's the report, and if you have any questions, we can get into those.
One way to jump right in to our processes. I don't have any questions right now. Anyone else have any questions in the report?
I just want Stan, fairly typical of other school districts, large school districts like Cincinnati and Cleveland that report their financials in a similar way.
Oh, do they report them in a similar way?
I'm just
to be honest,
comparatively.
I don't know if they follow this same format. I have seen other schools do different formats. I don't know, maybe it's for simplicity purposes. I don't know. I prefer to have one consistent reporting format. I've found that if you begin to combine categories, you got to do that crosswalk, and then it may not be perfectly clear, and you'd see it here in one layout and then wonder how that corresponded to when we got to the 5-year forecast. We talked about variances and changes here. How does that impact over here? Well, here, this is a direct connect. So when you see these variances, you can see them flow right in the forecast. But to be honest, I haven't looked at a report from somebody like Cleveland.
One other thing too, days cash on hand, do you guys look at that? Does it mean anything? In hospital systems, airport systems, days cash on hand is a number that they calculate is very comparable to other industries. I don't know if that's something you guys...
A month to month, we don't look at that. Typically, it's at the forecast level, and we'll look each year what the days cash on hand is. This board does not have a formal policy. We do have an informal policy of 30 days cash, which is in that 75 to 80 million range in terms of expenditures. We do have that as a discussion point. Again, it's not a hard policy practice.
Sure.
I discussed that with the rating agencies, and it was a topic of discussion last May and June when we were doing the levy campaign. Do we target that 30 days cash, which means you need more millage, or do we, because it's 5 years out, let that not meet that target? At that point in time, we chose not to plan to meet that target out to 2021. But yeah, it is a, I typically will plot that, and it's a kind of a leading indicator, so that as you see cash balance approach that 30-day cash number, it should be a signal that we need to make some sort of an adjustment. And we, like all school districts, have 3 things we can do. We can increase revenue, we can reduce expenditures, or we can do a combination of each. But we do use the 30-day cash as a flag, if you will, to say, as you get close to it, you need to be discussing what kind of changes you might want to make.
Thank you.
All right.
Okay, good. Thanks for coming.
Well, I think that item 4 finishes that up, and then now we just have a few updates. Real quick, we'll have the 5-year forecast presentation, kicking that off for October and September. And I'll let you talk about the opportunity study of your office, as well as our facilities operating budget. And like I was describing that before, that's when we'll be starting to dive into this new process of looking at our buildings, what makes them unique and different, what sort of costs are going into those. Our team, Maurice, and all of our team have been really working hard on that, and really excited and thankful for all the hard work they've done for that. I would like to, I know this is a lot, but we have roughly 37 days until the next finance meeting here, and if it would be helpful, especially for our new members, we could easily set something up, let you guys sort of stew and think about some of the things that we've talked about today, have maybe a follow-up, and maybe meet in the treasurer's office with Mr. Gooding maybe sometime before. I know people's schedules are busy, and I'm not sure, have you started sending out calendar invites to all the committee members for the upcoming year for these meetings?
For the balance of this year and through January, there should be invitations out there.
Okay. So, if there is time, maybe we can send out an email, and I'm sure, like I said, everyone's busy, but if that would be something you'd like to do, we'd be completely fine. Just having a little more informal sort of setting. We can look at other documents, other things that we've been doing, maybe a little bit more background and things like that. Because I know this is we just went right into it, right into our sort of normal processes, and I'm sure folks have questions. So if that's something that you'd be interested in, just let us know. We'd be happy to do that. And Stan, if you want to talk about maybe the opportunity study as well, which is we haven't mentioned yet.
And if I could, just so that everybody knows, and I think this is reasonably monumental, if you will, on the 5-year forecast, we're going to be doing that entirely in-house. We're going to build our own model. I don't know how, the model really should be very similar district to district, because you can only model property taxes and state income one way pretty much, but we're going to bring that in-house. We're also going to have that capability to use it for more what-if scenarios in terms of changes in the budget, whether it's on the personnel side or on the non-personnel side. We'll be able to model that out. And again, like I said, we like to look at things in terms of the 5-year forecast, and with that in-house, I think we'll be able to tailor it to our needs. So that's really my bailiwick to do. So I enjoyed building that so far. So we'll see how that comes out. On the opportunity study, the genesis of this was my good friends at the Internal Auditor's Office here. Actually, it was an audit that Kevin did, and he noted that we didn't have written procedure manuals in various sections of my department. He recommended that perhaps we might want to consider doing that. And that blossomed into just more of a discussion with a couple of the members of the Finance Committee about perhaps if you have someone come in to do that written procedures documentation, perhaps they can look at those procedures and then begin to do things like, well, what are some best practices? Are you following that? Instead of just documenting and writing down what we do, make some recommendations relative to best practices, some benchmarking or metrics that we can use to see how efficient and effective we are, and then how do we interact with other departments within the district, what are our inputs and outputs, and how does all of that work, and just have a good look from an outsider as to what we might be able to do better. It's as simple as that. So we have an RFQ out now. Quite frankly, I've had this discussion for a couple of years. This has been kind of a project that we've been mulling over for some time, and so we're finally, really got the wheels in motions with the RFQ. I anticipate to take the results of that to the board perhaps in October, with work to begin late October, early December. The most obvious deliverables will be written procedures, but other than that, then there'll be, I believe, a whole list of potential recommendations or ideas that we might want to pursue to enhance the operation. So I think that's the opportunity study.
For instance, in the city of Columbus, we deal a lot with economic development issues in the form of abatements. We'd like to have a better understanding of how that affects us. What's a good deal versus a bad deal, and how can we best position ourselves and work together with the city to make sure that, we have a seat at the table. It does affect us. It does, there is an impact. We want to make sure that as a district that we're keeping on top of that. And for the board, it's been very important, but it's something that we would like to explore through the opportunity study as well. It's just another sort of tangible that we've been thinking about.
When did the RFQs, you've already put them out already?
They went out the 1st of August.
Okay.
And I think we have a meeting next Wednesday, a pre-quote
Like an interested people kind of meeting, yeah.
next Wednesday. Then about a week later, they're due back. We'll begin to analyze and assess them in early part to mid of September, have a recommendation to the board in October.
Well, I think that concludes our updates. Does anyone else they'd like to update the committee?
Have you talked sufficiently about the operational cost study?
I think so.
Okay, good.
I think we.
I'm trying to create an Excel guru out of our chief operating officer. I drive him crazy a little bit at times. One other, if I may, one other update that I just got today, so it wasn't on the agenda. The district bonds are rated, the vast majority of them are rated by Moody's and S&P. There was, I believe, a singular bond issue that was rated one or two, just one issue was rated by Fitch. And so all three of them periodically come back and do an update. Last August, Fitch changed their rating criteria. They, in essence, kind of changed the cut score, if you will, in many areas. They reevaluated all of their public entities and came back. At that point in time, they downgraded us from a AA+ to a AA. They recently came back in the last month, had a conversation with them, went through all the finances and discussions and whatnot. They reissued, they affirmed our AA rating as of today, so they made a press release on that.
Fantastic.
So under their new guidelines, we're stable, so they're good to go with that. So I just will add that to the minutes that I shared that. They made a press statement. We don't typically make a press statement about it, but that was good news. Anytime they come in and take a look, and doing nothing is good as far as I'm concerned at this point. Yes.
I just wanted to let these gentlemen know, one of our accomplishments has been to create the state online checkbook,
Oh,
right?
yes.
So, and now we actually have two, so is it Taylor, the internal system?
Tyler.
And then we're also, the finances are available. So it was an effort toward the trust and transparency to, join some of the other state organizations. So, and I believe there's a link on the Columbus, the school's website.
Yes.
I was looking for it, but yes.
From a public standpoint, people have been very positive about that transparency.
Yeah, I think so. We went with both because, quite frankly, the treasurer's office was confusing and clunky, and we were uncomfortable going with just that. So we wanted to make sure that we were covering our bases and making sure we had not only satisfied that desire, but at the same time make sure we had something out there that really explained it to better detail so people could actually understand what they're looking at.
A little context that goes along
Correct.
with it, absolutely.
Yes.
What what we looked at, the treasurer's website is the expenditure side only. We didn't think that was a complete picture. That was the free site. We could have purchased more through their partner in that, and when we priced that out, we found that our ERP provider, Tyler, the Munis system, was actually cheaper for us to do it that way. The interface is simpler. With the Treasurer States, we have to create a file and upload it, which we do once a year. We don't keep it current month to month. With Tyler, the interface is every Friday night. So the data is live and up to date, quite frankly, faster than I can look at it, and sooner than you guys get to see it, definitely sooner than the board gets to see it in this format. So that's up and running. And we have found, and Mike is a champion of this, if someone comes in and says, well, how much did we spend on, or where did we spend our money last year, he typically goes, well, have you gone to our website? And when you go to the transparency site, you can drill down into various categories and pretty much find an answer to anything you want. I'm pleased that we actually sat with the reporter from the Columbus Dispatch that covers the district and walked through the website. And he said, well, if I wanted to know this and ask some questions, we realized that that was not a view that we had. So we went and said, okay, we'll put that out there. So we work with people who actually work with the data, and if they want to see it a different way or get a different cut through our database, we can go in and have that put into place. So it really isn't an easy place for them to go, and it has worked. That person has called and said, looked at your site, here's what I found, am I reading this correctly? And it worked. He was correct. He had interpreted it, and got the data, so that's really well. In addition, we actually, as far as I know, to the best of my knowledge with this firm, we are the first district in the state, actually the first public entity in the state, to go with a site dedicated to investors, bond lending. And so we have very similar information, but formatted in a different way for bond investors. And we did that just prior to a bond sale in January. And so we really have 3 transparency sites, if you will, for folks to go. So all the financial information is the same, but the layout can be a little bit different from what a bond investor wants to see. And it's worked well. So to the extent that transparency was an issue, I don't believe anyone could claim that to be true. With the 3 sites, with this committee, with the ongoing open conversations and discussions we have, you know, if you don't know about our school finances, it's probably your fault. You know, I mean, be honest. I mean, we push so much out and make so much available, and we're here to answer questions. So, yeah, I think it's great.
The state treasurer still hasn't updated it.
We sent the data to the state treasurer back as soon as we closed, and it's still not up.
They're busy with other things.
Which is exactly why we
Where
didn't
you
want to
went
rely
the
on
route
that.
you went.
Yeah. So we can take care of it ourselves.
All right. Any other updates, Dr. Good? Anything from you?
No, I know I'm going to run right home and get on that dashboard and
Absolutely.
look at our finances.
Yeah.
You know, the next 5 months are going to be fun.
At our next meeting, you'll have 106 days left.
Is that what it is? Did you figure that out?
That's also on the dashboard now.
And I get lighter and lighter, my picture does.
Yeah.
It fades away.
Marty
Thanks.
McFly.
I feel the love. I feel the love.
So
Well-
September 14th, is that our?
That is our next meeting.
Okay.
And by the way, the second meeting late in, I think it's a Tuesday in September, is tentative because we wait and see how the discussion goes on the 5-year forecast. And should the committee decide to ask me to change assumptions, make modifications in some way, or has questions that require some more research, we reserve that date to meet one more time to address those issues, let the committee see any revisions prior to it going to the board, the first meeting in October. What I I believe I instituted, I don't know, but anyway, this is what I wanted to do. I didn't want to take the forecast to the board and have them adopt it all in the same evening. So we presented the first board meeting, adopt the second board meeting. When we had the finance committee established, then we wanted them to, you folks, to see it a month before that. So all of that pushes my preparation further back. So as you can imagine, right now, I'm working with what I know today in August, which you'll see in September, which we'll adopt in October. And by October, things can change, but that's just part of the preparation
It's
process.
the nature of a 5-year formula.
Yeah, yeah.
Can
So-
change and will probably be changed.
Yeah, but the important thing is there is a process and there's ample time for review. And it's not my forecast, it's our forecast, it's the board's forecast. I may make some assumptions that you disagree with. May I share our inside joke?
Please.
We were talking about what do you assume, given that we assumed 7.5 throughout the forecast in state cap growth. Now we're at 4.1 and 4. And I suggested that perhaps for conservatism, we might want to assume something less. 2, 2.5. Board member Peretti took a different stance and said, let's assume that what we're getting now would carry on into the future. And we had a lively discussion about the differences in those assumptions. So right now, in the forecast I'm building, it'll be 4 throughout, but I affectionately refer to that as the Peretti model.
It's going to come back to haunt me on the next biennium budget unless some things change in that area.
Which is part and parcel of you know, as a participant in something like that, we all share responsibility. And we have our fingerprint in there. I do keep track that you remember, Mr. Brown, that was your idea. But it's good. I think we then develop a well-grounded, a very sound forecast that isn't just last year plus some. It's grounded in this budget work that Scott does with all the budget managers, and we know pretty much what we're going to do out the next 5 years, or what we'd like to do. And it just makes for a better understanding and just a very solid forecast. But we're still going to, the only thing I can tell you for sure about the forecast is the numbers we see 6 months from now or a year from now will be different than what I show you today. And that's the only certainty that we have. So that's it.
Any more updates for any other committee members? Anything at all? All right. Well, again, I just want to thank the new members. I want to thank everyone. It's the start of a new school year. This is our first meeting, and like I said, we're going to have a lot of action coming up these next few months. We'll have Stan circle back around with the gentlemen if you'd like to have any sort of follow-up meeting or anything like that here in the district. And I guess with that, I will make a motion to adjourn. Do I have a second?
Second.
All those in favor say aye.
Aye.
All those same sign opposed. All right. Thank you very much, everyone. I appreciate it.
Get home, get